Good day, technologians! Welcome to another fun-filled learning here in Teknoy Tutorials. I am your tutor, Carina Malinao, a first-year BS Accountancy student all the way from Junior Philippine Institute of Accountants of CIT University. In this video, I am going to discuss the very first topic of Intermediate Accounting 1, entitled Cash and Cash Equivalents. As we all know, cash and cash equivalents are the first item under current assets section of the Statement of Financial Position. As accountants, we must be familiar on what are the items that we should include and report in this account, and also identify if the items stated should not be included nor reported in this account. Okay, handa na ba kayo sa exciting part? I'm sure you are, but before we proceed to the lecture, here are the learning objectives you are expected to accomplish and comprehend at the end of this video. First, you'll be able to familiarize the basic terminologies and definition that concerns cash and cash equivalents. Next, you'll be able to identify what are the items that is included as cash, items included as a cash equivalent, and items that may not be part of either. Lastly, after watching this video, hopefully you may be able to solve comprehensive problems that concerns cash and cash equivalents. Alright, before anything else, please don't forget to like this video, comment your thoughts below, and subscribe to Teknoy Archives. Okay, to formally start our discussion, let us first define cash. Cash. Cash includes money or its equivalent that is readily available for unrestricted use. And when we say unrestricted, this means that for an item to qualify as cash, it must be easily accessible to pay current obligations and not subject to any restrictions, contractual or otherwise. Cash is always measured at its face amount or face value. But you might wonder, how about those cash in foreign currency? Well, cash denominated in foreign currency is translated at the current exchange rate at the reporting date. Take note that only those unrestricted deposits in foreign banks that are available for immediate withdrawal are included as cash. Moreover, cash maintained in a bank undergoing bankruptcy is excluded from cash and is presented as a receivable measured at its realizable value. Moving forward, other negotiable instruments that can be used to settle obligations and are readily available for unrestricted use may form as a part of cash. Now, what are items included in cash? First, we have cash on hand. Cash on hand refers to undeposited collections awaiting deposit and other current funds held as of the reporting period. Examples include checks received from customers or other external parties such as customers' checks, cashiers or managers' checks, and travelers' checks. We also have bank drafts. Bank drafts are guarantees by bank to advance funds on the demand by the party to whom the draft was directed. And of course, money orders. Money orders are similar to bank drafts, but they are drawn from post offices or other financial institutions. Also included as cash are cash in bank. Cash in bank refers to deposits in banks that are available for immediate withdrawal and unrestricted use. Example includes demand deposit or checking account and saving deposit. We also have cash funds or working funds as part of items included as cash. Cash funds are funds that are set aside for current operations. Examples are the following: petty cash fund, payroll fund, dividend fund, and tax fund. All right, I hope you grasp the basic concepts as well as items that belongs to cash. Now, let us proceed in defining cash equivalents. According to Philippine Accounting Standard 7, paragraph 6, cash equivalents are short-term and highly liquid investments that are readily convertible to known amounts of cash and so near maturity that they present insignificant risk of changes in value because of changes in interest rate. Take note that only highly liquid investments or debt securities acquired 3 months or less before maturity can qualify as cash equivalents. Hence, any items such as treasury bills acquired more than 3 months before its maturity does not qualify as cash equivalents. With that being said, what are the items included as a cash equivalent? Examples are as follows: 3-month BSP Treasury Bill, 3-year BSP Treasury Bill purchased 3 months before maturity date, 3-month time deposit, and 3-month money market instrument or commercial papers. Take note, Teknoy, that what is important is the date of acquisition, which should be 3 months or less before the maturity date. Hence, if you have a 1-year treasury bill with 3 months before maturity, but you acquired it 5 months ago, that treasury bill cannot be included as a cash equivalent. At this juncture, let us dig deeper and identify other items that may or may not be included as cash and cash equivalents. As we know, entities usually enter into a borrowing arrangement with banks, and those arrangements involves minimum balances that must be maintained. This is particularly known as compensating balances. Now, if the compensating balance has no legal restrictions as to withdrawal, it is reported as part of the entity's cash. However, if there is a legal restriction as to withdrawal, the amount may be reported as cash held as compensating balance under current asset if the related loan is short-term. Consequently, if the compensating balance is related to a long-term loan, it is reported as a long-term investment or non-current investment in the statement of financial position. Again, if there is no legal restrictions as to withdrawal, which means you can withdraw it anytime and use it anytime for your operations, then there is no problem. You can report the compensating balance as cash. Next, when the cash in bank account has a credit balance, it is said to be an overdraft. The credit balance in the cash in bank account results from the issuance of checks in excess of the deposits. A bank overdraft is classified as a current liability and should not be offset against other bank accounts with debit balances. For example, an entity maintains 2 bank accounts, 500,000 in PNB and 100,000 overdraft and credit balance in BSP. Since these are different banks, the entity is not allowed to offset the 100,000 overdrawn amount from BSP to the 500,000 debit balance of PNB. However, as an exception to the rule on overdraft, when an entity maintains 2 or more accounts in one bank and one bank account results in an overdraft, Such overdraft can be offset against the other bank account with a debit balance in order to show cash. As shown in this example, since both accounts are under the same bank, PNB, the 10,000 overdraft can be offset to the 50,000 debit balance of the current account. Hence, in this example, the net amount of current account balance of the entity and PNB is 40,000. Remember, Teknoy, that bank overdrafts are not permitted in the Philippines. Next item is the undelivered or unreleased check. This check is merely drawn and recorded but not given to the payee before the end of the reporting period. This check is part of cash because there is no payment when the check is pending delivery to the payee at the end of the reporting period. The reason is that undelivered check is still subject to the entity's control and may thus be canceled anytime before delivery at the discretion of the entity. To demonstrate, here is a sample scenario. Check of 10,000 in payment of accounts payable was dated and recorded on December 31, 2020, but it was mailed to creditors on January 11, 2021. Although the check was dated and recorded in this accounting period, the check haven't reached the hands of the creditors nor encashed by the creditors until the next accounting period. That is why we add this 10,000 undelivered check as part of the entity's cash. Moving forward, we have post-dated checks. Post-dated checks are checks that bears a date subsequent to the end of the reporting period. If it is post-dated check delivered, it is therefore restored to the cash balance. The reason behind this is that our cash hasn't decreased and no payment was made until the check was presented to the bank for encashment or deposit. However, if we are the ones who received a post-dated check, then the said amount is not included as cash. This is because we are not able to encash or deposit the said amount not until it is ready according to the date stated. To further elaborate, consider this example. Customer check for 30,000 dated January 18, 2022 was included in the December 31, 2021 checkbook balance. Assuming the reporting period ends on December 31, 2021, the 30,000 pesos customer check cannot be considered as cash since it can only be ready for encashment or deposit on January, which is already on the next accounting period. Remember that for an item to be considered as cash, it must be readily available for use in this period. But obviously, in this example, the check can only be accessed in the subsequent period. Hence, this post-dated check received from customers are excluded as cash. Now, let us proceed to stale checks. A stale check is a check not encashed by the payee within a relatively long period of time. In banking practice, a check becomes stale if not encashed within 6 months from the time of issuance. But then, of course, the period of time before checks become stale is a matter of company policy. Thus, even after 3 months only, the entity may issue a stop payment order to the bank for the cancellation of a previously issued check. Hence, with that being said, stale check delivered to payees and other external parties are included as cash due to the fact that the amount was unsuccessfully encashed by the payee. However, if it is us who received a check that became stale, then that check is no longer part of cash. All right, everyone. Those are significant items you must know that are part of cash and cash equivalents. Now, at this part, I am going to discuss to you what are items not included as cash and cash equivalents. First, we have IOUs or advances to employees. Cash in closed banks. Third is postage stamps. Postage stamps is a non-cash item since unused postage stamps are actually treated as prepaid supplies. We also have NSF or No Sufficient Fund Check or DAIF or Drawn Against Insufficient Funds Check received. But take note, if the check is redeposited and cleared on the same period, it may take part as cash. Lastly, cash funds that are not available for use in current operations or set aside for acquisition of long-term assets are not part of cash. Examples include sinking fund, contingency fund, and insurance fund. Okay, Teknoy, this time to assess our understanding to the discussion, let us have a brief exercise. All you have to do is to classify the following items stated if they should be reported as cash, cash equivalent, current asset other than cash, non-current asset, current liability. Again, in the next slide, I'll be giving you items and you will identify if those items should be reported as cash, cash equivalent, current asset other than cash, non-current asset, or current liability. Get a pen and paper and identify which these items fall into. The first is cash available for immediate use. Second item, 3-month BSP Treasury bill. Cash set aside for the payment of dividends. Compensating balances related to short-term borrowings which are legally restricted. And the last item is bank overdraft. Teknoy, you may take your time by pausing this video and play it again once you are ready to check your answers. Again, in 5 seconds, I'll be showing the answers to make this video short as possible. So you may take your time by clicking the pause button. Go, guys! Okay, I assume that you are all ready. Time to check your answers. For the first item, cash available for immediate use is obviously cash. A 3-month BSP Treasury bill is part of cash equivalent. Third item, cash set aside for the payment of dividends is included in cash. For item number 4, compensating balances related to short-term borrowings which are legally restricted are part of current assets, specifically using the cash held as compensating balance account since this is legally restricted compensating balance and is related to a short-term loan. Hence, the answer for item number 4 is current asset. For the last item, as mentioned a while ago, bank overdrafts are classified as current liability. Okay, Teknoy, did you get all the items correctly? If yes, give yourselves a big thumbs up. To continue, let us move on to the most exciting part of this lecture, which is solving comprehensive problems. Problems that involves cash and cash equivalents. At this part, you will be solving for the total amount to be reported as cash and cash equivalents. Again, in the next few slides, you will be given a problem and all you have to do is to solve for the total amount to be reported as cash and cash equivalents. Teknoy, make sure you have your pen, paper, and calculator with you as we proceed in problem solving. Are you guys ready? I assume you are. Here's the first problem. Trandia Company revealed the following information on December 31, 2021. Cash in checking account, 350,000. Cash in money market account, 750,000. Treasury bill, purchased November 1, 2021, maturing on January 31, 2022, 3,500,000. And time deposit, purchased December 1, 2021, maturing on March 31, 2022, for 4 million. Question: what amount should be reported as cash and cash equivalents on December 31, 2021? Again, what amount should be reported as cash and cash equivalents on December 31, 2021? In 5 seconds, I will be flashing the answer. So make sure to pause this video and take time to solve this problem. Laban, Teknoy, you can do it. Kudos for answering the first problem. The total cash and cash equivalents of Trandia Company is 4,600,000. The cash and cash equivalent items include cash in checking account, cash in money market account, treasury bill purchased November 1, 2021 and maturing on January 31, 2022. As you notice, the treasury bill was purchased 3 months before its maturity date, so it is part of cash and cash equivalent. However, the time deposit, which was purchased on December 1, has been acquired 4 months before its maturity. Hence, it is excluded in the cash and cash equivalent. To those who got this right, give yourselves 3 loud claps. Now, let's move on to the next problem. I'm sure you guys are as thrilled as me. Get your calculators and solve this problem. On December 31, 2021, Roma Company reported cash balance of 9,950,000. Undeposited collections, 600,000. Cash in bank, BDO checking account, 4 million. Undeposited NSF check received from customer, dated December 31, 2021, 150,000. Undeposited check from a customer, dated January 15, 2022, 250,000. Cash in bank, BDO fund for payroll, 1 million. Cash in bank, BDO time deposit, 90 days, 2 million. Cash in foreign bank, restricted, for 1,500,000. Cash in bank, BDO value added tax account, for 450,000. Question: on December 31, 2021, what total amount should be reported as cash and cash equivalents? Again, on December 31, 2021, what total amount should be reported as cash and cash equivalents? Like before, in 5 seconds, I will be flashing the answer to your screen. So make sure to pause this video and take time to solve these problems. Kaya yan, Teknoy! Go, go, go! Wow, that was fast, ma'am sir. I'm sure this problem is pretty easy for you, no? Now, let's check if your answer is correct. For Roma Company, the total amount reported as cash and cash equivalents is 8,050,000. We got this answer by simply adding the following items which are part of cash and cash equivalents. Undeposited collections, cash in bank BDO checking account, cash in bank BDO fund for payroll, cash in bank BDO time deposit 90 days, and cash in bank BDO value added tax account. To get the total of 8,050,000 pesos. To those who got this right, keep it up, guys, and give yourselves 3 Spartan yells. Aho, aho, aho. Now, let us move on to our very last problem. I know you can do this, Teknoy. Grab that marvelous calculator and solve this problem. On December 31, 2021, Lamentable Company had the following cash balances. Cash in bank current account for 6 million, petty cash fund, all funds were reimbursed at year end for 50,000, time deposit 3 months due January 15, 2022 for 2,500,000, and savings deposit for 1 million. Take note that the cash in bank included 400,000 of compensating balance against a short-term borrowing arrangement. The compensating balance is legally restricted as to withdrawal. Question: what total amount should be reported as cash and cash equivalents? Again, what total amount should be reported as cash and cash equivalents? In 5 seconds, I will be flashing the answer, so make sure to pause this video and take time to solve this problem. Aja technologians. Okay, Madi, it's time to check your answer. For Lamentable Company, the total amount to be reported as cash and cash equivalents is 9,150,000. Did you also get the correct answer? Well, congratulations. We got this amount by adding cash in bank current account 606 million, petty cash fund where all funds were reimbursed at year end 50,000, time deposit 3 months due January 15, 2022, 2,500,000, and also add the savings deposit for 1 million. However, we also deducted the 400,000 legally restricted compensating balance, which was included in the cash in bank. Again, that is how we arrived at 9,150,000. If you got that right, then why not give yourself 3 pats? Once again, congratulations for successfully answering the problems. And thank you so much, Teknoy, for your active participation. I would also like to thank and give full credits to the following references that I used for my tutorial in this video. Once again, thank you so much, Teknoy, for watching and joining me in this exciting lecture. I'm sure that this discussion really helped you a lot in studying cash and cash equivalents. Please do not forget to share this video to your friends so that they'll be able to grasp the fundamental knowledge of cash and cash equivalents. This has been your lively accounting tutor, Carina Malinao, waving goodbye. See you to our next accounting lesson.